Since 1987, we've helped investors navigate the markets using technical research focused on relative strength, supply and demand, and momentum. From sector rotation to asset class rankings, we highlight what drives performance. Nasdaq, Dorsey, Wright, helping you stay one step ahead.
Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast. It is Wednesday, August 26th. I'm Saunders, joined here by Trevor. Trevor, good to see you here.
Yeah, always a pleasure having you, or you having me.
Yeah, back and forth. You've probably been on more than me these days, but this is a little bit different. We didn't have we had a podcast last week. We didn't release a new recording of a podcast last week. We had some obviously very unfortunate news with found out about the passing of Tom Dorsey. We had some notes out on the website. We reposted the podcast, which I gave that a listen again. It was some great content that he and Miles had, but it was pretty shocking to hear, to say the least, the loss of a legend, and him and Watson Wright both within a couple weeks of each other. It was pretty shocking.
Yeah, it definitely was, not only to the team here, but a lot of clients and really just people in the community. I know both Watson and Tom made a huge impact on so many people, and honestly really appreciate all the condolences, stories, and memories that you guys have sent over the last couple of weeks. So it's been a lot of trying times here for the Dorsey Wright team, but know a lot of the positive memories that you guys have shared have kept us going.
Yeah, he was very Tom, especially there, very inspirational person, very large personality. And if anyone knew him, he would definitely want us to keep things rolling and hit on market action. So we will do just that. And diving into some of the other movement, though, over the course of the past week, we did get a few changes in some of our major indicators. So we have a few different indicators. For those that are familiar, we have the DALI, Dynamic Asset Level Investing tool, which is kind of like a heat map of the market, like a big picture, 30,000 foot view of where strength is in the market. And there's a pretty big change, right?
Yeah, I mean, that is like really one of the biggest measures of longer term strength in the market, and specifically on the asset class side, it had been relatively stable here for a couple of months. Hadn't seen a lot of changes. You saw kind of global equities, kind of neck or both domestic and international equities kind of neck and neck with each other, with international equities being slightly ahead. But over the last week, we did see domestic equities there in that kind of heat map move ahead of international equities for the first time since I believe February of earlier this year, when things were kind of almost a three-way tie with commodities as well for a little bit. But still should note that are relatively close together. I mean, there's still only one signal separating both domestic and international equities, but definitely a little bit of a shift from what has been kind of the number one spot there over the last couple of months or few months at this point. Still see some leadership from both areas. I mean, when you look at the difference between international equities and commodities, almost 120 signal gap between international equities and then the next closest group, commodities. So both areas remain points of leadership. It's just that, relatively speaking, can always have one area do a little bit better, and that's kind of what we saw. I think one kind of tidbit I put from kind of a piece that we wrote right when that DALI change happens, was just kind of looking at the last 3 months, kind of where have those signal changes come from that actually caused that change in ranking there in DALI. And you saw that international equities over that span gained 8 signals, so relatively speaking, improving versus those other assets. Just that domestic equities over that same span picked up 23 signals, so improving even further than international equities. But again, both points remain areas of strength.
Yeah, I mean, you can see. So one thing I like doing for those that are following along on YouTube or any of the other podcast platforms, you can change it to a history view. So you can click on the history tab, and you can see the day by day or whatever time period you want. I like going to the month over month view of domestic equities versus international. We talked about that on the podcast before. I think we talked about it last time you and I were on the podcast before. I think I do it maybe too frequently. But you can see on that view that even just over the past few weeks, right, since the end of July, domestic equities has lost 2 signals, actually. International has lost 6 signals. They're very close in signals, one signal separated. Commodities actually picked up. It's gained 11 over the course of the past few weeks, which is interesting to note. If you go back further, like you said, net since we actually saw international take over domestic equities, since international moved above, we've seen a little bit of back and forth movement there. but it's been relatively kind of consistent. It hasn't lost a ton of strength. It hasn't gained a ton more strength either. We are exactly the same amount of, I guess, year end or month end buy signals that we were at the end of February, right? And so we haven't seen a ton of change on the international side, the consistency, which is not a bad thing. It's just not been as much improvement maybe as we've seen recently from domestic equities that have fallen down and picked up over 20 signals since that March low. So commodities was a lot higher, fell off, starting to bounce back a little bit though. I know Miles was putting a piece out about that today.
Yeah, I mean, definitely been a little bit more volatile for the commodity group. I mean, some of the global conflict hasn't helped with that, especially with some of those energy commodities, but have seen a little bit of a pick back up as we've spoken in kind of crude oil, some of the energy commodities, but also in gold and precious metals. So had seen a little bit of a bump. So we'll see if that continues to kind of sustain that strength going forward. Still only an increase of kind of 30 signals or so from those lows there at the end of June when you look at that chart there. So we'll see if the asset class can kind of continue gaining that strength. Still kind of a wide lead between that, but certainly encouraging for the broader commodity group, but still has some work to do, I think. Before
that
certainly
drop
overtakes.
That drop we saw in June is pretty wild though. Going from 214 down to 148. I mean, dropping 60 plus signals over the course of 1 month is speaks to the volatility that you were just talking about.
Yeah, absolutely.
And so we just haven't seen, even though we've seen a 10 signal bounce, that is nowhere near the 60 signal decline that we saw in a few weeks span back at the end of the second quarter. Well, great. When looking at some other changes in DALI, I mean, in some of the movement that's been driving some of the improvement in domestic equities, right? International's been kind of steady as she goes. We've seen some back and forth action there. It's been a little bit more consistent. You're saying it hasn't moved around a ton over the course of the past week, right? Domestic equities, we have seen a change on the sector ranking side over the course of the past week, right?
Yeah, among those 11 major sectors that we track previously this year, I mean, it was all about technology, with semis kind of really just on a tear there. July, we saw things pull back. Industrials moved ahead to first, overtaking technology. But over the last month, 2 months, we have seen a little bit of leadership from some of those kind of kind of AI theme areas. Healthcare, notably now taking the number one spot in DALI at about a 6 signal lead over industrials, specifically the biotechnology area, as well as pharmaceutical companies, have been on quite a run here, both over the last month and over the last year, leading to kind of the sustained strength that pushed them over the edge, especially as some of those industrial and technology names might be taking a little bit of a breather, but notably also seeing some strength from financials too, also has kind of risen slowly or kind of maintained the more middle of the pack level before kind of bumping up. Now only about 2 signals away from overtaking technology in those broader rankings. So definitely seeing a little bit of shift underneath the surface, even if things have been a little bit more steady over the last month or so as for the kind of broader domestic equity group.
Yeah, I mean, we've seen technology isn't one that most people typically want to hit on, right? But when you look at that month over month view, I mean, you look back at the end of May, technology 241 RS buy signals, it's fallen 163. I mean, that's a big drop.
No, notably.
That is a very notable drop, and it's still maintained. It's still top 3. It's still generally favored area. It could still bounce higher. We're recording this at around 2 p.m. right now, Eastern time on Wednesday, 26th. Obviously, a big company, NVIDIA, reporting this afternoon. That could send things one way or the other, right? We'll see how that kind of shakes out. It had more muted kind of post NVIDIA earnings action over the past several quarters. So we'll see. We won't dive into that right now. But basic materials has jumped up a lot. You jumped up 44 RS buy signals over the course of the past 3 weeks. Healthcare, to your point, jumped up 17. Industrials fallen a little bit. Financials pretty steady there. This is not a bad thing to see other areas improving. It's not like technology's dropping drastically in the rankings. You're just seeing other stuff, to your point, like healthcare, that moved up sharply. You get a sharp move higher like that. We've seen some positive, some kind of AI effects come through, and we've seen a lot better kind of screening of or production of certain cures or drugs, I guess, right?
Biotechnology, I think that's been a little bit.
I'm not a medical professional. I don't know as much about the healthcare space, but I know that price has been going up. At the end of the day, that's kind of what matters for us.
The demand has been there.
Exactly, right. The demand has certainly been there. That'll be an interesting place to monitor. I haven't looked at stuff like XBT. I know that's the biotech ETF. Oh, that is not the biotech ETF. I'm thinking of FBT, I believe.
Thinking of the first trust.
Yeah, FBT, 5.76 fund score. We've seen real sharp appreciation from this fund. It's up on a pretty significant stem, though.
Mm-hmm.
I mean, looking at the broader healthcare representative XLV, so still strong looking area there in biotech, but is on a notable stem. Not as strong of a fund score for XLV, 3.72, but a more consistent improvement we've seen too. So maybe we'll see if we get a little bit more follow through there. We can. It's probably a little bit better to look at some more focused areas within the space.
Yeah, I think that if you also look at that market relative strength chart, I think that is one of the closest to reversing.
Which one?
For XLV and then SPX EWY.
Got it.
Just pull up that market RS chart. Think about it 1% away from moving back into a column of.
Yeah, and then only a couple boxes there from giving a buy signal that does continue. Now, a couple boxes on a 3.25, we need like nearly 10% more improvement to get back to a buy signal. But at least convexes would help that score.
Yeah, absolutely.
Yeah. That'll be a pretty interesting area to.
Yeah. Within the group, though, the broader healthcare group, like we mentioned earlier, those biotech and then pharmaceutical representatives have been a little bit like if you look at like IHE or something. I think we've mentioned this on the podcast before, but continues to be pretty consistent. I know we saw that pretty otherworldly move from Moderna there as well. That's also been a little bit of a tailwind for the broader space in general. So that has been a notably consistent chart there, and then now kind of on somewhat of a stem again.
Yeah, I mean but you're seeing almost what looking like it might want to pull back. I mean, 5.77 fund score for IHE. It's not what we would consider to be heavily overbought. I mean, it's 61% overbought oversold. You're getting 1% decline today. Let's see what the intraday overbought oversold is. And for those that are not following along, we're just looking at the chart there. It looks strong. Doesn't have much in near-term support, but you are only at around 50% overbought, which we've
just been kind of slowly pushing higher. No real kind of downside enough to cause that reversal back into O's.
Let's see what happens when we go to 1 point chart. Yeah, you do get some support in there. So this chart, since it goes from 90 up to 100, it goes to a $2 box size chart. I dropped it back down to $1. That gives you more support. You have support at 100 and support right beneath there at 99, smack dab in the middle of its trading band. I mean, honestly, even if you get a reversal down in a column of those, this would look to be a pretty favorable technical area.
Yeah.
So I think that would definitely
sometimes those pullbacks, like we mentioned, can't always be a healthy breather as long as that kind of longer term picture maintains healthy.
Yeah, absolutely. Buy on pullback. It's a great. It rolls off the tongue well.
Yes, it does.
Yeah. When we're looking at other things going on in the marketplace, I know there's it hasn't been as much action. It's kind of a quiet
theme going on.
Yeah, over the course of the past couple weeks here. But we're getting into the fall. Kids are starting to go back to school, right? We're starting to get into some maybe people coming back from vacation. And at least in the news recently, I've seen a lot of conversation around midterm election primaries. And so once we start to get into midterm election season, that time of year tends to actually have some interesting effect on market action moving forward. You did a piece back in March that looked at we generally see a spike in volatility in midterm election years. That was the general gist, right?
Yeah, I mean, when you think about it conceptually too, it makes sense. I mean, there's typically more policy uncertainty, more potential for things to move around a little bit. And then as potentially you find out the results of those elections, you resolve that uncertainty. Markets obviously don't like uncertainty. And when that's resolved, see price action move a little bit higher. So previously what I had found is that kind of the start of a midterm election year can be one of the weakest out of any kind of presidential election cycle year. But then kind of the bottom ends up kind of coming around October, also kind of lining up with when elections can be before things kind of move higher. And then notably third year of an election, also pretty solid. But we kind of frame that again in a new article that you just put out, Ian, kind of seeing a little bit of similar things in the market and kind of a little bit of a potential tailwind, hopefully, if we see some similar resolution of that uncertainty, kind of looking ahead at the 2027 or end of 2026. I know you have the numbers pulled up, right?
Yeah.
It's pretty stark.
In looking at these, and to your point, and looking at the you can look at the year by year breakdown, which I scrolled past quickly. But you can see here you averaged around 7% year one. You average about 3.68% about there. So you average 3.68% year two. Average nearly 14% year three. So year two is definitely by average the worst. Year three is definitely by average significantly better than anything else. And to your point, it's that uncertainty. And I think you phrased it very well. The markets don't like uncertainty, right? They're going to kind of puddle along. We've seen a lot of back and forth volatile action throughout the year, some sharp downs, some sharp ups. But after that uncertainty is maybe alleviated, so the last couple months of the year, right, tends to see pretty positive action, at least again on average historically. And you can see that really when you're looking at the looking at SPX returns by year, but then by quarter within each year. The second quarter of year one tends to be pretty strong. Averages nearly a 6% return in that quarter alone. The second and third quarter of year two generally tend to be the weakest. They average a loss in both of those. Now, we haven't seen that. We saw a loss in Q1 of this year, down nearly 5%. Q2 bounced back pretty solidly, up over 14%, right? Averages are just averages. And we actually rarely hit the averages, but the important thing is starting in Q4, typically starting in that, honestly, November, it picks up the pace pretty significantly into year end and continues for this first half of next year on average, right? We'll see how that shakes out this year, but I think that's an important underlying current to keep track of going on in the marketplace. And when you look down at each year, we said the averages are averages, are never going to be spot on. I mean, beginning of this quarter, I was actually taking a look at updating this chart beginning of the year. We ended Q1 down 4.63%. We ended Q1 of 2022 down 4.95%. It's a little scary because the second quarter of 2022, we dropped 16%, right? Opposite story this time. We were up 14%. We haven't seen the same. It's not consistent year to year. There's some interesting stats, though, that I think you can pull from this table that we're following along with. It is honestly pretty rare to see the S&P 500 be positive in the first half and the second half of a midterm election year. This is the 25th occurrence that we have in our data set going back to 1930. We've only seen 8 times that the market has been positive first half and second half. We'll see if that happens this time. It's not out of the realm of possibility by any means, but it is rare. Now, we're already solidly positive, not quite double digits, 9% through the end of last week. But we do see if the market is positive in the second half, it's generally pretty solidly positive. So out of
that magnitude of upside, for whatever reason, that kind of resolution of potential uncertainty has, historically speaking, led to a little bit more upside.
Right. If you just look at, how often what year looked exactly like this, I would say, well, I mean, I would hope it's 1938 because the market was up 9.57% and finished the second half up 13% there to round out a 24% gain for the index. I mean, that would be great. We're up 9.55, so we missed it by 2/100ths in the first half. But when you're looking at it, we've seen 10 years that the S&P has been positive double digits in the second half of the year out of 15 total times that we've seen the S&P be positive in the second half of the year. So a lot of averages and stats out there. The market's never going to perform exactly as we see in the averages, but at least the averages are kind of on our
guidance. I mean, it's historical tendencies for a reason. And I mean, when you think about kind of why, I mean, there's a catalyst behind it. And so looking towards portfolios, towards markets, towards the rest of this year, start of next year, there at least is that catalyst for potential kind of resuming of that upside for markets and domestic equities as a whole.
Yeah, absolutely. So we're looking a little bit outside of the DALI movement, right? We've talked about some of the DALI asset class rotation. We've talked about sector rotation. We've talked about potential seasonal rotation. One thing that we hadn't talked about at all over the past several months was Bitcoin, and it came back with a vengeance, right?
Oh yeah, definitely came back alive. Almost Frankenstein version with how much upside we saw this past week. But really, just for context, to kind of set a backdrop, Bitcoin from its October highs kind of declined more than 50% just within a couple of months there through, I think, February. Kind of had an initial bounce back and then kind of hit even lower bottoms there earlier this summer. But notably last week, we did see 3 consecutive positive days for Bitcoin in which it gained more than 5%. And within that 5-day stretch, gained more than 20%. One of the largest 3-day gains we've seen for Bitcoin in recent years. And when you look at kind of the improvement that we've seen within there, kind of viewing it through the lens of different indicators, we can kind of put together this picture of, okay, are we really seeing this sustained improvement? And I think when you think of kind of evaluating the strength of participation or domestic equities, oftentimes we have these indicators at different horizons where maybe you look at something like like a shorter term indicator, like the 10-week for SPX or NYSE, you say, okay, are we seeing confirmation of that in the bullish percents? Are we seeing confirmation of the bullish percents in the PTs? And so kind of doing something similar. Did an article here for Bitcoin recently, looking at kind of the more sensitive indicators, working our way up to some of the more longer term indicators. And obviously Bitcoin and cryptocurrencies do move around a lot. So what we might say is longer term might be more intermediate term for the stock market. But kind of when you evaluate some of the most important things for Bitcoin, starting off, like the moving averages for Bitcoin have historically been one of the best indications of strength on a shorter term basis. So think maybe a couple of weeks. If it's trading above the 50-day moving average or 200-day moving average, historically you see the majority of upside come during those periods. Notably, I think moved above both of those for the first time in pretty much almost a year, at least since October of last year, which was kind of the top. So really seeing some strength and signs that we hadn't on that near-term basis that we hadn't seen in quite a while.
Right. And when you're looking at some of the others, you were looking at the bogey check, right? I mean, that we generally see if it's passing, it's better than when it's failing. Similar kind of story. And when you're looking at the market relative strength, I would imagine it's a similar kind of deal. We see a little bit more lack of follow through. We would like to see that go back to a buy signal, I would say.
Yeah, I mean, that's the most longer term signal out of those three. And so, I mean, obviously a portfolio switching between either of those, historically owning either domestic equities or Bitcoin, has outperformed Bitcoin itself, which not much you can say that does that. But I think that is kind of the final sign that might lead us more towards that longer term picture or sustained strength that we previously saw in years past. Right now, maybe that shorter term strength might still be there in a way that maybe active investors willing to get out a little bit more quickly might be more willing to hop in now. But for those just hoping to kind of set it and forget it for a couple months, I mean, one, with Bitcoin, not necessarily always the best move, but especially in an environment like this, might want to see a little bit more sustained strength. But there certainly are some encouraging signs when you take a look at either Bitcoin or the iShares Bitcoin ETF.
Yeah, I'm pulling that up here. I mean, looks like you got pretty notable overhead resistance around the 4650 point from a rally that failed in May. But yeah, to your point, real clear consolidation in the upper 30s and then mid 30s, a couple points this year that, I mean, I would expect, even though we've been on quite a run, I would expect those areas to potentially kind of come back in as potential resistance point moving forward, right?
Yeah, so I think certainly levels to watch out for there. If it's able to break through those, obviously a more positive sign. Breaking through resistance, always a good thing in terms of that increased demand potentially coming in. But as of right now, still facing those different levels. Want to keep an eye out if it's able to continue that going forward, especially with how much it's run up on a little bit of an extended stem of X's. Especially on that IBIT charts. So I could see a little bit of consolidation, resume that upside, but obviously could shake out back to the downside. So we'll keep an eye out on where things move out from here. Certainly encouraging movement over the last week, but Bitcoin, one of the most volatile things out there. There's very few things that can have a 20% up week. So certainly one to watch going forward.
Yeah, I mean, once you get north of that 4650 resistance, if we do get north of that, I mean, you'd be looking at the 50 to 55 range as notable overhead resistance from there, from its kind of consolidation period at the end of last year. And then if you get north of that, I mean, you're basically looking at $5 as kind of potential overhead resistance until you get back to potentially those all-time highs up in the 71 spots up there. So it'll be interesting to see kind of what plays out. It's always, I think it's fun when Bitcoin's doing well because it gets people interested in price action.
Yeah,
at the end of the day, that's kind of what it is,
the ultimate supply and demand.
Yeah, that's all it is. Are there more buyers and sellers? That is the only thing that matters, right? Especially there for Bitcoin. So cool. Any other cryptocurrencies you're going to run through, like Litecoin, Filecoin, all those?
I mean, it is kind of interesting. You have seen a little bit of an increase in breadth there for the broader crypto space. Like if you look at the members of what is now the Nasdaq CME crypto index, I think none of those individual cryptocurrencies traded on a buy signal.
Is that ticker NCIQ for the hashtag one, right?
Yeah, that's the hashtag version. None of the constituents of that traded on a buy signal. I think at the end of June, I think currently the majority do at this point. I think only
right.
a few that don't. So have seen a much higher increase in breadth in kind of names participating in that upside. It's not just Bitcoin, it's not just Ethereum, it's a little bit more broad based. So encouraging for the space, but like with a lot of those names, I mean, they might still be down 50% from highs, have a good bit of work to do in the near term to kind of continue that to some strength going forward.
Yeah.
So we'll see how things shake out.
We'll look for the follow-up. Yeah, look for the follow-through, I guess.
See where the supply and demand ends us.
Yeah, exactly. Well, great, cool. Well, Trevor, thanks for hopping on or letting me hop on with you. I guess whichever way we'll go there.
Yeah.
And thanks
Pleasure as
everyone.
always.
Thanks everyone for tuning in this week. And we look forward to talking to you next week.